Hey, TMFG community, Carlo Cancino here, again with John Iaconetti. Today, we're diving into something that might sound dry at first, but stick with us. It's a major shift in how Canada sees its future.
That's right. The budget 2025 isn't just another spreadsheet of government spending. It's the first under Prime Minister Mark Carney and Finance Minister François-Philippe Champagne. And it's being called a blueprint for a new kind of economic strategy.
That's exactly it. For years, Canada's budgets were reactive, responding to crises such as inflation spikes, global supply shocks, or COVID-19 recovery. But this one flips the logic. It's about proactive nation building, using investment and discipline to make Canada stronger before the next shock hits.
So it's like going from firefighting to future building.
Well, that's a perfect analogy. The world's becoming more unpredictable, trade patterns are shifting, and tech is accelerating. Even national security is back on the table. Ottawa's betting that the best defense against global volatility is to build resilience at home. But does that mean more spending?
Yes, but not aimless spending. Think of it as strategic investment. The fiscal anchors are clear. Balance day-to-day operations by 2028, maintain a falling debt to GDP ratio, and mobilize nearly $1 trillion in investment over the next 5 years. $1 trillion is not necessarily small change.
No. And the key is where that money goes. We're not in maintenance mode. This is long-term nation building on a scale that hasn't been seen since post-war Reconstruction era.
So let's look exactly what Canada's building with all that cash. To understand why this budget matters, it is essential to see where we've come from. Canada's past few budgets, especially those following the pandemic, have been mostly reactive. Relief checks, wage subsidies, emergency loans, necessary, yes, but short-term. So it was like keeping the lights on rather than rewiring the house.
Right, that's exactly it. This year, the tone changes. The message from Ottawa is clear. The global economy is entering a new era, and it's marked by, disrupted supply chains, rising energy costs, and I think what Prime Minister Carney calls the perma-crisis. Therefore, Canada needs to build internal strength in areas such as infrastructure, productivity, defense, and remaining competitive.
And the new fiscal anchors are like guide rails for that.
Yeah. The goal is to balance operational spending by 2028 to 2029, meaning the government aims to cover its daily expenses without incurring debt. But at the same time, they're greenlighting massive strategic investments to help shape the next generation of growth.
And that's an interesting balancing act, growing but staying disciplined. It's the economic equivalent of working out and dieting simultaneously.
Yeah.
The idea is to invest in future capacity without losing credibility or markets or taxpayers.
And I think that's the proactive part, preparing for uncertainty but not reacting to it. We can think of it as shifting from what can we fix to what can we actually build.
I like that. But what does building look like in the numbers?
Well, John, let's dive into it.
So where does that $1 trillion figure go?
Well, that I think is the $1 trillion question. Over the next 5 years, the government plans to invest approximately $280 billion, with roughly $115 billion allocated to infrastructure, $110 billion to productivity and competitiveness, $30 billion to defense and security, and approximately $25 billion to housing. So infrastructure and productivity receive the largest slices of that pie.
And those are going to be the engines of long-term resilience. Infrastructure isn't just bridges and highways anymore. It's green grids, public transit, broadband, and critical minerals for the clean tech transition.
What about productivity?
That's about future industries, AI, robotics, biotech, and manufacturing modernization. Canada has lagged in productivity growth over 2 decades. This budget aims to address that issue with targeting tax credits and research and development funding.
Right.
The idea is to build not just things, but capabilities.
And that $30 billion for defense might surprise some, but it's part of the resilience story. It covers recruitment, infrastructure repair, and cyber defense, not just buying jets or submarines.
And that feels like a nod to both global uncertainty and domestic readiness.
Right. But then there's housing, and that's a huge political pressure point. Ottawa's committing to collaborating with Indigenous communities and municipalities to accelerate supply and address the affordability issue.
It's like building homes, building confidence, and building capacity.
Right. Again, the overall message is that these are proactive, not reactive investments. Instead of reacting to crises like the housing bubbles or the defense shortages, the government's trying to prevent them.
But $1 trillion can't come out of nowhere. So how do we pay for this?
And that's what everybody's going to be talking about. So let's talk about the trade-offs.
So, Carlo, big vision, big spending. What's the restraint?
Well, it's right here. Ottawa's targeting $60 billion in savings and new revenues over 5 years. The key levers, I think, are reducing operating costs, trimming the federal civil service by about 10%, and cracking down on tax evasion and inefficiencies.
A 10% cut to public service, won't that hurt us?
Well, it depends on how it's done. I think the idea isn't to weaken public services, but to modernize them through digital transformation, automation, and efficiency gains. It's less about laying people off, but more about rethinking the bureaucracy. So I would think that efficiency is the investment, really.
Yeah, that's a very good point. Fiscal discipline isn't about austerity, it's about credibility. Investors, credit agencies, and the public want to see Canada can manage growth responsibly. And that's why they want to keep the deficit to GDP ratio declining.
Right. So the deficit is projected at about $78 billion next year, but that is supposed to taper down to $56 billion by 2029. That's still a huge number, but trending downward.
And the trade-off is spend to grow, but streamline to sustain.
You got it. The government's betting that a leaner, smarter state can fund the long-term growth and then at the same time maintain the fiscal health.
And that leads us to the next big question. What does this mean for Canadians directly?
I think that's what everybody wants to know about the budget. And this is where the numbers meet the neighborhoods. Budget 2025 includes incentives that aim to make citizens active participants in nation building.
So let's start with housing. You mentioned affordability.
Yeah.
The GST rebate for first-time home buyers is being expanded, making it easier for younger Canadians and families to enter into the market. It's modest, but it signals the government recognizes homeownership as a national stability issue.
Right.
And on the digital side?
Well, there's major development, new legislation to regulate fiat-backed stablecoins and establish an open banking framework. That means fintech companies and traditional banks will operate on clearer, consumer protective rules.
So basically, safer innovation.
Yeah, that in a nutshell. It provides Canadians with more choice while ensuring that we're financially stable. And that's a necessary step as we transition toward a more digital economy. Additionally, Indigenous partnerships are a central focus of this budget.
Absolutely. There's an emphasis on co-developing projects through the Major Projects Office and the Indigenous Advisory Council. It's a recognition that nation building must be inclusive and economic growth and reconciliation go hand in hand. So, for everyday Canadians, this budget's saying you're part of the rebuild.
Yeah, and I think that's what people want to hear. The government's betting that by empowering us through housing, innovation, and inclusion, it creates that long-term social capital within the country.
Yep, but no plan is going to be perfect, right?
Yeah.
So what are people worried about?
Well, every budget can't satisfy everybody. There's going to be pushback. I think the biggest concerns here are private sector investment. Critics say public money can only go so far. Without private engagement, productivity growth may still lag.
That's right, because governments can kickstart growth, but the private sector must sustain it.
Exactly. Number two, deficits remain really high. And I think that's what a lot of people see when they see this amount of spending. But even with the savings, the debt load leaves little room for unexpected shocks, such as, if global growth stalls or interest rates start to spike again. I think it's a balancing act between ambition and risk.
Agree wholeheartedly. And the third challenge is execution. Rolling out major infrastructure, housing, and defense projects requires coordination across provinces, industries, and Indigenous governments. Implementation delays could blunt the impact of the budget. And politically, big spending always divides opinions.
It does. I think we were talking about that when we were preparing this video.
Yeah.
How was it going to be taken? But, we wanted to give, the information so that everybody could have their own opinion about it. But you're right, it does. The difference this time is the framing. This isn't about stimulus. It's about being sovereign and resilient. But critics from both sides, fiscal conservatives and progressive advocates, they're watching closely.
Yeah, I agree. And there are going to be numerous moving parts and high expectations.
Right. Despite the risks, this shift represents something bigger. But I'll let you talk about what truly matters.
After everything we've covered, what makes this budget truly different? It's the mindset. For decades, Canada's budgets manage crises. This one is trying to shape the future. It's not just about a number, it's a national shift in philosophy. From safety nets to springboards.
That's a good one too. The government's saying we can't rely on old assumptions like cheap energy, stable trade, or low inflation. The future belongs to countries that plan, invest strategically, and then build that resilience.
Absolutely. It's a very powerful statement.
I think so. And it ties into identity. Canada aims to position itself as a self-sufficient and forward-looking economy. More innovation, more independence, and more inclusivity.
Almost like it's going to be an economic version of a national renewal.
Yeah. If it's successful, it could redefine what fiscal responsibility looks like. And that's not a matter of restraint, it's a strategic strength.
So instead of reacting to the world, Canada's trying to shape its place in it, which is a difference between managing and leading. And it's a very inspiring takeaway from the budget.
Yeah, I agree too. But with any blueprint, execution will determine whether this vision becomes reality or just another chapter in the cycle of reaction.
So there you have it. That's the budget from 2025, from firefighting to future building. Major investments, strategic trade-offs, and an unmistakable shift in how Canada sees its own potential.
It is ambitious, but I think it's also self-aware. The government's trying to show that being proactive doesn't mean reckless. I think you need to be prepared.
And we'll be watching to see how these investments play out in infrastructure, innovation, housing, and defense.
Because budgets aren't just about money, they're about the direction. Points we just talked about squarely point in the direction of resilience. Now, if this breakdown makes budgets a little less boring, hit the like button, subscribe for more insider takes on fiscal policy, and share it with someone who thinks numbers can't be fun.
And if you're looking for personalized financial advice or want to explore your options, please don't hesitate to contact us or request a meeting in the link below. We're here to help, but we'll see you in the next video.